Right, everyone, here we are with another video in the series of best stocks for 2020, and is it too late to buy? I'm going to be speaking about stocks that have had exponential growth over their time and period on the market, as well as how they've been doing in the last couple of years and what makes them such great stocks to add to your portfolio. These videos are here to inform you guys, equip you guys to build a strong portfolio that will continue to give you guys great returns. And some of these will even have great dividends. And that's what this whole series is about. I'm not here to tell you guys to buy. I'm not here to tell you guys to sell. I'm not here to tell you guys to hold. I don't get paid for informing you guys about anything in these charts and these specific companies. I'm just here to inform how great they are looking at their charts and the exponential growth that they have for the upcoming years and years to come. And you want to also be able to participate in owning these stocks at some point in time before it continues to grow exponentially. And then it's not that it's too late, but you're going to be paying more for the same stock you could have owned a while back and actually been making money at that time by that time. So I'm here to inform you guys on that. So anybody that feels encouraged to subscribe, don't forget to click on the bell and turn on all notifications for the video. And also to my subscribers, I want to say thank you, and I hope you guys enjoy this video. So here we are first with Microsoft. And Microsoft has had exponential growth for years now. I mean, it was worth cents at one point before their split, I guess. And here we are over time, growing and growing. Um, to the point that in the 2000s they hit the $50 marks. They kind of leveled off, and they were always hanging out around the 20, 30 mark, hitting almost 40, falling back down below 20, and then growing again. And their true growth started from 2014 and forward. Interesting enough, I don't know how to spell his first name, but I do know his last name, and I don't want to incorrectly state it or spell it or pronounce it, but Mr. Nadella took over the company in 2014. And a little bit of his background and why I believe he's done a great job in making the company Microsoft grow is because he was in charge of the company's cloud infrastructure and service of business. So, with being that uh, concentrated and an expert in cloud-based services, he's been able to implement that into what the company actually now bases most of their revenue on. And I mean, you could see the growth from that point forward. I mean, it's brought the company up by like 400 to 300% since 2014. Incredible run, incredible growth. And I know that Microsoft has always been reliant on Office software and Windows operating system. And I'm not saying that they still don't rely on it, but they rely on it a lot less. And they still make their revenue through there. But something that Mr. Nadella has been able to apply is his expertise in being in charge of the company's cloud infrastructure and making it most of where their revenue is coming from and one of their main services. I mean, just after they created their Azure cloud service, it grew 62% in just a year. When they added that, their revenue grew by that much. Also, their server products and cloud services rose 30%. Um, great stuff. Um, which they ended, in 2019, the year like that, and their growth is continuing as things become more digital and become more reliant of more information, more informatics, more space, and more of necessary cloud-based services in the background, right? But and behind this whole entire Google screen and this whole screen right now on my computer, and as you're watching it on your phone, I mean there is cloud-based services running, and that is what Microsoft has become an expert in. And another thing too, Microsoft has always paid a quarterly dividend since 2004. And I mean in 2004, we're way back here and they've been doing that since then. That shows that they're a healthy company that's been growing over time and been able to pay their shareholders to the point that now in the fiscal year of 2020, it's been paying quarterly dividends of 51 cents per share. So if you own 100 shares, 51 cents, that's a total of $51. 100 shares times 51 cents. That is just amazing right there. Where else are you going to make that? 100 shares times 51 cents. If you grab your calculator and see it, that's $51. If you owned 1,000, right, times 51 cents, that right there is $510. And if you own 10,000 and you got 51 cents per share, that you just made $5,000 in dividends. And if it happens 4 times, those dividends have paid you basically, if you own 10,000 shares, $20,400 just in the year without doing anything, even while the company's growing and moving up and down, moving up and down. But as you can see, year over year, I mean, even before this slight fall that we had in March, right? It was hanging out at 187, and from 187 to where we're at right now, it's a $44 growth of 20%, and even just at this slight dip, it's a growth of $16. I mean, your shares have still grown by $16 each if you just held through this whole process and also obtained dividends. So your dividends have been paying you and so forth. So Microsoft has a great following and a great market share here with people really being part of their organization and investing in them. Let's see here in the chart how it did since this slight crash, and here we are at its peak. And it grew 70%, grew $95.67. That's phenomenal growth there per share. And as this dipped, which the whole market has been feeling this, as I do this video, you'll see all of them that had this slight dip in the last couple of days. And I want to advise everybody that these are the best stocks to own, not just 2020, but to have owned over the years and to probably own in the next upcoming years because of the potential and growth that these companies will continue to have. So the question is it too late? I don't believe it's too late. But one thing I do believe is I'd pay very close attention to how these stocks break through their support levels and how they're hanging out and where they're heading before buying in. But even if you buy in a little earlier than the low that these stocks might hit, or if this is the low, you will recover your money over time because these stocks are really on their way to not just prove their potential because they've already have, but to continue to show their potential in the next coming years to grow. But phenomenal growth here. 1 year, you could see it's been growing steadily before this fall, and it fell and it continued to grow and it's hit new highs. The 5 year, healthy growth here, and in the last 5 years, it's slightly a little bit after Mr. Nadella took over the company, and you could just see that steady growth from Microsoft over time. And if we go all the way back, I mean, it's just been growing and growing and growing to the point that it was steady for a couple years. It slightly dipped back in 2009. It grew back up, and from 2014 forward, it has grown. And if they continue to profit and create revenue from their cloud-based services, as Mr. Nadella has implicated into the company, plus their Windows operating system and Office software, I mean, Microsoft is just going to continue to blow off the charts and continue to grow significantly. Another thing too, in April of 2019, which is a great and significant thing as well, and it just shows how committed investors are and how many investors are involved in Microsoft Corporation, how much the company has been growing. It became the third company to achieve a market capitalization of more than $1 trillion. And as we could see it here, it is $1.54 trillion in market cap. I mean, that just shows you how many people are involved and how many people are bullish and believe in Microsoft. It wouldn't reach 1 trillion on its own. I mean, that is phenomenal when it comes to stockholder stake in the market for this company, and also the company's growth naturally over time and value. So great stuff for Microsoft. I definitely advise you guys to do your own due diligence and research. This is a great one to have in your portfolio. And the point of this video is for you guys to know which stocks, even though they were the best stocks to own in 2020 through their growth over time, right? And from the fall to where we're at now, They may not have grown the most, but they had a steady growth, and they will continue to have a steady growth. And the question is it too late? And these companies, it's never too late to buy them. It's just doing your own rational decisions and feeling in your intentions, right, as an investor when you feel ready to jump in and own these stocks. But these are stocks that I'm here to share that you guys may have overlooked or may have known already about, but just been hesitant. And I'm just here to confirm you guys they are great stocks to add in your portfolio over time, building an allowance to be able to purchase these stocks over time and build a portfolio that's going to continue to grow. All right, let's go on to the next one. Alphabet. I mean, from the beginning of their time here in 2004 that it went public, Alphabet owns Google and it owns YouTube. So my search engine here is Google, as we can see, and we are watching this video here on YouTube. YouTube has a great advertisement strategy with analytics and search engine and searching of keywords and so forth. And the same thing with Google. I mean, it's incredible how Google can get you results of 56,900,000 results in less than 1 second. That right there is a powerhouse. And they have great cloud-based services as well. And they are one of the powerhouses of the search engine and online video services with YouTube. Here again, I just want to reiterate, I don't get paid for talking about this. I'm just speaking about Google, and it so happens to be the owner of YouTube. And Google is one of the largest companies that exists by market capitalization as well. And Google is one of those that has had a steady growth over time and very, very powerful company over time. Even did a stock split in 2014, right? And it just continued to grow from that point forward. And the hopes is for many investors that haven't had a chance, and I know 1500 is a little too much to get into this company, we're all hoping for another stock split, and that would be a great opportunity for any of us. But even before stock split, this is a great company to own. And let's go ahead and look here at how it grew from the dip to its peak here after that crash that we had earlier this year and where we're at now. So it grew $663.26. That's a 62% growth. And yes, it slightly fell. And from that fall, right? And this fall, it's still up 43%, up $461.63. So even though there's been a slight sell-off, and like I said, a lot of fear and sell-off and people taking profits or just um, the crash of the market is being felt again. A lot of people are saying the 2.0 is on its way or the 2.0.com. I mean, there's so many different analysts saying different things. But yes, we're starting to see this slowly fall. And again, at 1500, this may be a lot, but this is something to definitely consider adding to your portfolio. The reason why Google is phenomenal, and I would really want to be someone that owns Google, right, as an investor, hypothetically speaking, is because this stock shows its potential over the years and how their chart has just healthy growth. It's had healthy growth from the beginning in 2004 all the way to where we're at now. And there's been ups and downs, and the hardest down was now, and that was almost like a discount per se from the last couple of years because in the last 5 years, when it was close to that price, right, it was back in like 2018, and we hadn't seen that price again since, and close to the 1,000 mark, and it just exponentially grew. And there's a slight dip. The whole market has been feeling that, but this company will continue to grow, and we can see that in its chart. And it is the powerhouse of search engines, and it is the powerhouse of online videos. And YouTube has a great, great, great marketing and advertisement strategy and analytics and program. And also, Google itself knows how to place words and different information in different locations based off of people's habits of searching and what they're looking for, what websites they've been in. I mean, Google is powerful. And before getting to any website, you need to go through Google most of the time. 9 times out of 10, you go through Google first and then you get there. And any website that pops up, right, that pops up in these lists are paying for this position to be there. I mean, Finance Yahoo comes up 2 times. They paid to be there. Market Watch, Fool. I mean, all those companies are paying advertisement. They are a powerhouse, and they're sitting on $119.7 billion of cash. They're sitting on that. And they are also one of the companies to have a market cap of over $1 trillion. And that right there speaks in high volumes of the company itself. And it became the fourth company to have a market capitalization of more than $1 trillion in January 16th of 2020. That happened by the beginning of this year. It finally broke through that point, and Google is just going to continue to be valued more and more, and that market cap is going to continue to grow as investors continue to realize they want to own a stake in Alphabet, which owns Google and YouTube, and both of these companies, which are just one company actually, with these subsidiary um, uh, portions of Alphabet. Alphabet will continue to grow exponentially as it has been, and it's going to be the powerhouse of the search engines and advertisement and so forth. So this is a great one to add to your portfolio. One of the best stocks in 2020 to have owned. Went up by $600, and that is significant per share. And even though it may seem like a small percentage, 62, $600 growth per share is phenomenal for a company this size, and the growth we will continue to see it. The next one is McDonald's. And I know who would think McDonald's, right? McDonald's is pretty affordable, but McDonald's is one of the largest companies with annual revenue when it comes to fast food chains. One of the largest. I believe it is the largest. And its next competitor really close to it, and it's twice as much in revenue compared to that competitor, is Starbucks. And you can see Starbucks value if you search it up. It's a lot less than McDonald's, and you can just see it in the share price how much more times McDonald's is in size. Incredible, incredible company, and it's one of the most valuable food brands in the world since 2019 at 130.4 billion. And right now their market cap is actually above that, which is 162.2 billion uh, amount in dollars. I mean, the market cap isn't as large as Google and it isn't as large as Microsoft, but McDonald's is a growing company and is one of the largest fast food chains in the U.S. by sales, as it's proven for the years and years that have been passing by. And also, McDonald's has created a following for people to stay with them due to their dividend payments every year since 1977, actually. It's been growing it every year annually. And in 2019, its annual dividend amount was $4.73, up from 2018 at $4.19. So that growth right there is phenomenal for shareholders, and they're just paying back to all their shareholders tremendously. In the 10 years ended on April 2nd of 2020 this year, the stock's total return, excluding reinvested dividends, was 132.5%. And including reinvested dividends, it was 190.54%. I mean, that right there shows how much the stock's total return has been for the last 10 years and how it will continue to make a company that will give you back possibly just as much or even more over time. If it's done that in the last 10 years, it will continue to do that. And if we see here at this peak before the fall, it was at around $215, and they already broke through that, and we're at 218. But before looking at anything else, I want to see these dips here of 137, where the company was when it fell to its lows, and here we are up 59% plus $80.90, almost $81, right? Just to round it up. And McDonald's has had a steady and healthy growth since that fall. Now, if we go back 1 year, it was really stable. And the reason why it's stable, you could see that is because of its dividends payout. That right there speaks in high volumes of its investors and how people are actually sticking around for this particular stock and not really planning on going anywhere. I mean, these slight dips are people probably taking small profits and then reinvesting again, and then it regrows. But if we go back 5 years and the 1 year mark before the dip, you can kind of see how it hung out. But if we go all the way back, this was at $97 and some change. And it's been growing steadily and quickly over the years, great performance over time. And if we go back to Max, I mean, this growth was exponential, and it all started back in like 2002. And from that moment forward, it's just been a rocket on its way up. And then 2016, 2015 mark, this stock definitely hit a point where it just shot up, and it went up from like $100 almost up to 200. And then it kind of hung out, and it's been up and down, a little volatile. And then obviously its hardest dip was at the beginning of this year, and the stock's already recovered $3 past where it was at before the fall. But as you can see here, McDonald's, everybody at some point ends up buying McDonald's, and it's a fast food chain that has the most revenue, and it's paying tremendous and generous amounts of dividend to all their investors per share, and shareholders are definitely sticking around to hang out. I mean, you could just see how it's been always a steady company. It's had slight falls, and then it recovers from them, and it continues to work its way up. This is definitely a company you want to have in your portfolio. And again, I'm not here to tell you to buy, sell, or hold. I'm just here to advise and enlighten anybody that's overlooked it or has thought about it and doesn't have the capital right now, and they're trying to build it through quick trades and other trading um, strategies. But once you're ready to actually build a portfolio, that's when you've become a strategic investor, because one thing is knowing how to day trade and trade, swing trading and trading quickly and making quick gains in a week or two, and that's great. So you can continually create a cash flow of income coming in, trading whatever you put in, get out a profit real quick. But building a portfolio of an allowance, let's just say an example, you have $1,000. You can go ahead and build a portfolio with monthly. I would buy two of McDonald's. I'd buy two of Microsoft, and per month I'm gonna save those other $200, and in about a total amount of like 8 months to 10 months, I'm gonna buy my first share of Google. But you do this monthly, and you're able to go ahead and do this, then you could probably get one or two alphabet stocks in the year, and you can get quite a few Microsoft and McDonald's. And I guarantee you, if you just go year over year, you know, excluding this issue, let's just go off of this bottom part to where we're at now. Per share, you'll be up $80, and then Microsoft, same thing year over year. Per share, you would be up you know, a total amount of $100. Hypothetically speaking, if you were able to do it since 2019, and then you're here, and then, so forth. So, I mean, the opportunity to build a portfolio is now. And these are companies that I would not miss out on adding. If you guys want to look at my other video, I talk about three other strong stocks, and those stocks are the ones that have had extreme growth in the last 6 months. I mean, we're talking about almost 300, 400% returns. And there are companies that are going to continue to grow significantly in the years to come. So I encourage you guys to check it out. Again, I'm not here to tell you guys to buy or sell or hold. I'm just here to advise you guys, enlighten you guys, and explain why you guys should definitely go ahead and add these to your portfolio, build an allowance, and I promise you, if you do it for 5 to 10 years, it will pay off in the long run, and that money at some point will multiply anywhere between 2 to 3 times what you put in it, and plus the dividends, and plus you continuing to buy and investing, you're gonna see returns, and you're gonna see some great opportunities to continue to build other portfolios. And then once you have a strong portfolio with companies like these, right, as I continue to build these videos and share them with you guys will be able to then play around with your extra money and take risk on startup companies and do those explosive returns. But anybody that's trying to build capital right now, I respect it. Go ahead and continue to do that. But the real investing strategies that I want to advise you all to really focus on is building a portfolio. If you don't have a portfolio and you just have stocks that you're going to hold for a week or 2 or 3 months, you're not really investing as strong as you can be. Invest to the strongest potential, continue to swing trade, continue to day trade, but you want to build a portfolio because these are seeds that you plant, and as seeds are watered and start to grow, they grow over time into a plant or a tree. A tree doesn't just grow overnight. It doesn't just grow in the next months. It takes years, and those trees will then give you fruits, and those fruits, you can reharvest them year after year, year after year, like as if it was dividends and even profits. You can cash out profits every year that you feel like it after 5 years have gone by, and your account is so big and you've invested so much into these companies that are growing. Then you can go ahead and cash out some profits, and then also cash out your dividends or reinvest your dividends and just cash out some profits, whatever it is that you need to do. But the point is, you got to look at it as seeds that are going to grow and they're going to give you fruits, and then you harvest them, and then you go ahead and decide what you want to do with them. Either you harvest them and you take them, or you go ahead and harvest them, you pull out their seeds, and then you replant them to make more and more growth. So I hope that this video means you all well. The video is about to pop up for the next video that I already posted last week, and I want you guys to check out. Those 3 stocks are great stocks as well. Great stocks. Explosive growth potential in the last couple of months, and they're going to continue to grow. I know that right now, again, I want to go ahead and mention it. The market's a little rocky. I'm not telling you guys to buy, sell, or hold right now, but at least keep these on your watch list and consider at some point in time as an investor to add these to your portfolio and build a strong portfolio that will be able to give you back what you've put in. Hope you guys found this video helpful and informative. Feel encouraged to subscribe. Don't forget to click on the bell by turning on all notifications to not miss a single video. Share us with your friends and community, and thank you guys so much for watching, and let's make some money.